Hello there, traders. Hello there. Good afternoon. Good afternoon. Welcome to Paul's Monday Market Update, number 224 for the Monday, the 11th of May, 2026. I hope you're all well. Hope you've had a good weekend. Hope you are ready for another interesting and eventful week in markets. As always, that has been the story of 2026. Just a quick bit of housekeeping. This will be the last one for a couple of weeks. Okay, we'll be taking a 2-week break. I'm away and traveling, and we'll be back on Monday, 1st of June. For those of you joining us for the first time, the Monday market update is just that. It is me flying through as much as I can share with you in the next 30 odd minutes as we take a look at strength and weakness within the FX and indices and commodities markets, look at a few charts of interest, and then take a look at the live markets. It is not a signal service. It is not trade recommendations. It is just me sharing what I'm looking at, which may be of interest to you, and you might want to add it to your own watch list. As always, you are always very welcome here, but just remember that you are always responsible for your own trading decisions. And for those of you who need a little bit more discipline, accountability, and consistency and structure in your trading, you can join the VTP Trader Accountability Group. The tag is all about helping you build that discipline, accountability, and consistency. You can ping me on my mail, or you can use that QR code, or use the Bitly code if you want a few more details. Is WIX, okay, Wix.com. All right, so once again, they are also reporting this week, so that kind of makes it interesting. But equally, one of my websites is run on WIX. We'll leave it to others to discuss the sort of technical capabilities of Wix and websites. All right, but I've exposed them with a website that runs on Wix. I have exposure, don't I? So it's in my interest to take a little bit of a look at these guys. So they have benefited from, once again, bingo words of AI integration, all right, website creation, automation, all right, and digital infrastructure, all those words that everybody loves to bound about. As investors, well, you can see for yourself that investors have kind of focused on margin expansion and subscription revenue rather than pure growth alone. And that's kind of curious, as someone who pays one of those subscriptions. But listen, what we've also seen is the kind of broader software sector that also remains sensitive to US yield and NASDAQ risk appetite. So, you want to watch what their guidance is, what their enterprise spending, commentary is this week. You can watch and see software names. They can move pretty quickly based upon forward expectations. The thing that I was intrigued is that you can see this has been in a pretty strong downtrend, hasn't it? But what I was looking at is, I see this as a double bottom forming here, and what has been acting as resistance is the 20-period moving average there, isn't it? And look where we are. We're kind of at $80, big round number. The 20's up here. We've formed this kind of double bottom at 60. So I'm looking at, are the earnings good enough to get us above that 20-period moving average, where if you look at it, the last time we were closing above it was, a good 9 months or so ago. Since then, it's been actually really fantastic dynamic resistance. If it gets above, well, then I'm looking at it, 100 then starts to become a magnet, by which time probably the 50 is down into this area as well. And then that becomes the next inflection point. Can it get above 100 and above the 50 to go to 200? Or does it sort of run out of steam here and sort of drift its way lower? So, I think it's an interesting chart. You might want to add that to your watch list, as I said, and see whether the earnings later this week can act as a pretty good catalyst for the next move.